Hello and welcome to this TO Markets daily market commentary for Monday, the 10th of February 2020. A new week begins with a familiar focus. While there are a few interesting economic events this week, most notably Fed Chairman Powell's testimony to the Joint Economic Committee, it will be the coronavirus developments that take center stage. New cases are still on the rise, and the prior 24 hours has seen the largest number of deaths in any single day. The fallout from restricted travel to China, as well as the direct effect on Chinese GDP, is anyone's guess. Keep in mind, many tech producers use China as a hub for manufacturing key parts. So every day the Chinese economy is adversely affected has a follow-on effect around the world. So how would the new week begin? For FX, a somewhat muted start in Asia, although Aussie would rally from 10-year lows as bargain hunters entered the market. A rally from 66.65 up to 67.05 will be short-lived though, and the lows will be tested once again in the US session. Euro-dollar could barely muster a 16-point combined range in Europe and Asia, but the US session would see a continuation of the recent trend, dropping from 109.50 to a low of 109.10. However, sterling would go the other way. There was no real news to drive the move, more of a technical play. The rally from 128.75 to 129.45 was probably driven as much by sterling cross-buying than any real move against the dollar. There was always a relative value play out there somewhere. However, by the New York close, sterling was back to 129.10 against the dollar. Dollar yen would be directionless under 110, despite equities in the US making modest gains by the time Europe went home. This was against a backdrop of losses in Asia and Europe. Dollar CAD had one brief dip below 133 the figure, but refused to go any lower, and gold chopped around, but ended near where it started, around the 1572 level. US equities will continue their push higher in the US afternoon, with the S&P and Nasdaq both closing at record highs, courtesy of Amazon. The Dow Jones would also close higher, up 174 points on the day. All of this amid the uncertainty of the coronavirus. Some economists estimates that US Q1 GDP could drop as low as plus 1.2% as a result. Go figure. Today was really another day of dollar strength, with only sterling putting up a determined fight. Euro-dollar leads the way as it continues to slide towards the all-important 108.80 level. But to really see the current dollar strength, which has been a theme for all of 2020, it's best to look at a dollar index chart, often referred to as the DXY, and that's what we have up in front of us here. On this 4-hour chart, I have drawn an up channel, which conveniently begins on December the 31st, 2019. Over the past couple of sessions, dollar strength has been so prevalent, we have actually broken out at the top of that channel. A test of last September's high of 99.67 now seems quite possible. Definitely worth keeping an eye on this chart over the coming days. And with that, I hope everyone had a successful start to the week, and wish you the best of luck with the week ahead. Cheers.